Welcome to the first talk in our new series, Building Your Cross-Border Career. My name is Elizabeth McIntyre. My pronouns are she, her, and I'm a white woman with glasses and light brown hair. And I'm here with my co-director, Rebecca Del Tufo from Screencraft Works. The topic today is setting up a film and TV craft business as a sole trader or managing your business life as a freelancer. Although the knowledge shared is from a UK perspective, the advice is useful to apply more generally across other countries as well. I'm delighted to hand to our speaker, Abu Chowdhury of Maple Wharf, to introduce himself more fulsomely and give his presentation. Thank you, Abu, and welcome.
Hi, good afternoon. Thank you very much for introduction, Elizabeth. Yeah, my name is Abu Chowdhury. I'm a co-founder and associate director of Maple Wharf. I'm working as an accountant over 15 years. I provide accountancy services throughout SMEs and SMEs businesses in the UK. We have some clients from outside the UK as well who trade in within the UK territory. In terms of what kind of services we provide, we provide all sorts of accounting services, including sole trader, freelancers, a limited company, private companies. In terms of the nature of services, we do business coaching as well as normal day-to-day bookkeeping, accounts, auditing, all sort of things we do. So that's all about me. Let's talk about what I would like to talk today. So today's topic is setting up a sole trader business in UK. So what I'll do, I'll quickly go through what exactly I will cover in today's topic. So first of all, I will cover what is freelancing. So this is really important for film industry, TV and film industry, and then I'll talk about difference between employment and freelancing, different types of freelancers, and understanding the UK tax system. So that would be pretty much what I will cover. Within understanding the UK tax system, I will cover some specific legal or tax rules regarding film and TV, how to set up sole trader accounts, or how to register as a sole trader, and then most importantly, what is the responsibility of a taxpayer. So that's I will also cover, and I'll touch upon MTD, which is making tax digital. HMRC is really pressing on this issue. So that would be the topic I'll cover. I've got a lot to cover, so I'll try to squeeze everything within my 45 minutes presentation, and I'll keep 15 minutes for Q&A. I'm also trying to do always trying to put my timer on so I can keep track of my time. Okay, so let's quickly talk about what is freelancing. Freelancing is so freelancer is someone who does work on a series of separate contracts each year. Those contracts can be one after another, and it could be recurrent depending on the role. The one thing to bring all freelancers together is they need to use their source for their own work, or they need to source their own work. That's what they need to do. And once you source your own work, then you can classify as a freelancer. This is unlikely a permanent contract of employment, where employer's responsibility to provide work to you, which always happen within employee environment. But as a freelancer, you need to find your own work, and people will hire, and they will hire because of your specific or specialist skill set. So that's basically classed as a freelancer. So and now let's talk about what is different between what's the difference between freelancing work and employment. So freelancing work is basically what I mentioned in the screen, is contracted for specific work and amount of time, paid by the job. So this is not you don't get paid by a monthly basis or So you'll work for a specific project and you'll get paid for this one. And this is not a regular income. This is kind of more irregular. It could be you got one project going on with this film industry, or could be this production, and you do, and then maybe same time concurrently you're having another one. But whereas in employment, you will work under an employer, and then they will pay a salary on month basis, regardless what work you're doing. They will provide the work. Most importantly, as a freelancer, you need to pay, or you need to look after your own tax. So you need to pay your income tax, you need to pay your national insurance, all other tax like VAT. It could be if you go student loan, all of those you need to provide. In terms of pension, if you really want to invest money in pension, then you have to do is a self-funded pension, whereas company or if you're employed, then your employer will provide pension scheme, and then you contribute, they contribute. So this is how it works. And finally, you need to use your own equipment in order to do that job. So say, for example, if you are a cameraman, as most of the time you might have your own camera, and you can take your own camera to the set and you use this is maybe not really good example, but say, for example, if you're a bookkeeper, you need to take your own laptop and you go there and you do those work. Yeah, so that's basically what's different between employment and freelancing work. Now let's talk about different types of freelancer. So a lot of people, there's a misunderstanding within tax area. People think freelancer is a sole trader. Actually, that's not quite true. A freelancer can be a limited company. A freelancer can be both sole trader and employment. A freelancer can be an employee as well. But the difference between employment and employee, so the difference between employment, which is as an employee, and freelancer are as follows. So if you're an employee, then you'll have a permanent contract, whereas if you are a freelancer, you might have a short-term POI contract. So say, for example, you're working on a project that's for 6 months or 3 months, or you might work for a short-term contract, or it could be like a fixed contract. Like literally, you come on board and you will do only this production. Once this production is finished, there is no work for you. So those, and you might be under POIE, but you can be classed as a freelancer. So and a lot of people they use as a freelancer, but their business vehicle will be a limited company. And mostly people are sole trader, they are freelancer, and that's the misconception. A lot of people they think if I'm a freelancer, then automatically I'm a sole trader, and this always happens. To be honest, most of the time this has happened, and that's why people think. But as I mentioned, you can be a sole trader, you can have a PYE mixed contract. And it could be sole trader as well as POIE. So say, for example, you are sole trader, you are doing one project, and maybe concurrently you are working on another project, which they hire you under POIE short-term contract. And sometimes it could be limited company. I will just only focus on sole trader side on this matter, because this is what our topics is. So if you're a sole trader, what it means is you're working for yourself. It's your responsibility to invoice for your service, and you need to complete your self-assessment tax return, and you need to submit to HM Revenue Custom, which is basically UK tax authority. And you need to pay your income tax and national insurance. Let's move on to the next topic, which is understanding the UK tax system. So this is what I'll spend a lot of time explaining how UK tax system works when you are a sole trader. We established freelancing and we also established sole trader side as well. So if we want to talk about UK tax system, first and foremost, we really need to talk about specific information or specific rules for TV and film industry. HMRC has got literally a manual, and HMRC has got their own manual, and it's a really big manual to cover who can be classed as a self-employed, which is basically another name for sole trader, technically. Yeah, so they have a really big manual, and in those manual, I wouldn't be able to cover those everything. Under this manual, they have a lot of different types of worker. So say, for example, it could be TV crew, cameraman. It could be yeah, TV crew, cameraman. It could be any kind of artist. So basically, whoever working behind the scene, all those people, every single people has got a different. Every single people has got a different rules. So and as I said, it'd be very difficult to go through all of those. So what I really will focus on this, the rules HMRC says ESM 4118. And I mean, you don't need to worry about this term, but just the reason I put it there, so in future, if someone wants to look at this, then they could literally Google it and they could find it from HMRC. And that's the reason I put it in the my slide. So this basically, this is for entertainment industry, TV, radio workers. Behind the camera worker rules, normally treated as self-employed, and as long as you fall under Appendix A, sorry, Appendix 1. And the reason this is quite important, this Appendix 1, so HMRC has got guidance, and this, if you go through Appendix 1, and they will tell you a different scenario, and then you can establish yourself. Do you really fall as a self-employed or you are not? And but I always advise those scenario, trying to find an accountant and get help from professional help from accountant. Unless you can establish yourself, that's fine, but it's better to get professional advice on this. And then let's talk about 7-day rules. There used to be a lot of different rules actually around this area, and I think back in 2019 they're trying to make it more simplistic approach, and now they focusing on 7-day rules and Lorimar letter as well. So I'll talk briefly those two area. 7-day rules is applies those worker is within the entertainment industry with the succession of different employers and who engage for 6 days or fewer for each contract. Employers need not deduct income tax from the payments made to those employee. However, national insurance will be paid in the usual manner. So what I mean is basically, if you fall within these 7-day rules, then the prospect, your employer, they will treat you as an employee, but they don't really take income tax. That will be your responsibility to pay income tax when you're doing your self-assessment taxation, which I will discuss later of this presentation. And but they will take national insurance from your contract. And what is national insurance? Whoever doesn't know, national insurance is basically it's a different form of tax. I mean, they don't call it tax, but if you like, this is a tax, different form of tax, but that's more to do with your national health, and they cover a lot of national health or budget when they do budgeting, and if they need more money spending on national health and stuff. So basically they use national insurance. And when you get older, normally if you contribute enough national insurance, then your pension become better. So I mean, this is very briefly, I'm just saying there are a lot more into it. So that's basically 7 days rules. And the next one is Lorimar letter. And that's quite popular because a lot of people use this. So sometimes this referred to as a LP10 letters or letter of authority. And this is a lot of camera workers, which is behind the scene, or prep worker, they use this kind of or this letter. So you basically, if you're a freelancer worker, not had a head of department or supplier of specialist equipment, and work for companies simultaneously, then you may be eligible for a letter from HMRC that grants you eligibility to be self-employed. Its name comes from a TV vision mixer, Jan Lorima, who owned a case code. And basically, this is how this name came about. But basically, BBC is a prime example. A lot of BBC worker, they use LP10 letters, and basically there is a if you go to HMRC website, they have a address where you can literally send the letters. You apply for it, and then they will issue LP10 letter. So that's basically how you can get. I think if you go to BBC website as well, they have a details article about how you can apply for LP10 letter, and that was quite helpful actually. This article, a lot of people they use this. By the way, if you have any question while I am presenting, please feel free to put it on chat box, and Elizabeth will monitor this. And yeah, if it's relevant, I would happy to answer those. But yeah, so that's basically what I'll do. Let's move into the next slide, which is how to set up a sole trader. So once you establish yourself, you are a sole trader, and then it's become your responsibility as a taxpayer to register yourself as a sole trader with HMRC. And HMRC has got a different way to register. One is you can get a paper application from HMRC website, you complete it, and you submit manually or by post. And then you can also do online. The problem with online, in order to do online, you have to have, actually it's not a problem, but in order to do online, you have to have a login details with HMRC, and it's quite straightforward to do it. So you first create your own login with HMRC, and then you go through the process. What you need to be very careful when you're registering, you need to choose the right boxes, why you are registering, and the date you started your self-employment or sole trader business. And the reason they are very, very important, because if you don't do this, and HMRC ever challenge the income before this area, then it get quite muddy. So it's better to be very precise about those issues. Usually it takes about 30 days to get your registration sorted. So you apply. Once you apply, you get acknowledgement email if you do online, and then HMRC issue a reference, and this reference called unique tax reference, which is UTR, is known as a UTR. So they will issue a UTR number, and it takes about 30 days unless HMRC is really busy. So since COVID, it takes sometime even 2 to 3 months to get this UTR number. Once you get the UTR number, then technically you are in HMRC's book, and HMRC issue a tax notice when you need to do tax return. Again, as this whole name called self-assessment. So even though HMRC send you notice to do the tax return, but actually it's not HMRC's duty, is taxpayer duty to make sure they're submitting their tax return on time. So that's really, really important. Some people I've seen over the years, they haven't submitted because they haven't received any reminder. But as a taxpayer, it's your responsibility to submit that tax return on time. So technically, registration is quite straightforward. It's not it's a little bit time consuming, but it's not a difficult job to do. Let's talk about what is the responsibility of the taxpayer. And this is really, really important. And this part I'll cover quite a bit, which is basically keeping the business records, declare all income, submit return on time, and all those things. So let's talk about keeping business record. This is where I found a lot of taxpayers that struggle, and they from when you set up your business, maybe this is the first time you're setting up as a sole trader, so you don't know what kind of records you need to keep. If you're a sole trader, it's your responsibility to invoice for your services to your customer. or your client. So you issue sales invoice on regular basis. Whenever you finish your job, you issue a sales invoice, and you need to make sure your invoice is aligned with HMRC guidelines. So say just to give you a flavor, in order to be a sales invoice, it has to be how much you are charging, what you're charging for, what is the date of the invoice, who you charging to, and who you are. And I think there are a few more as well, but I can't remember out of my head. But those are the primary things you really need to focus. So in order to have a valid sales invoice. And you need to keep track of all of your income as well. So say, for example, some business you might see they receive, again, maybe that's not really appropriate for film and TV industry, but for some other businesses, you don't issue sales invoice because you are getting payments for small payments. So say, for example, you provide a small service and then they send you, say, £150, and you forgot to issue sales invoice. Technically, the best practice is to issue sales invoice for every single thing. But if you realize, okay, I can't issue sales invoices for whatever the reason, then you have to keep track of your income on somewhere. And if HMRC ever want to investigate, you should have those readily available for HMRC to view. So that's a very important part. Secondly, let's talk about business expenses. So in order to claim expenses, you have to keep a record of those expenses. And later of this presentation, I'll also talk about a concept called MTD, which is making tax digital, and how making tax digital is really aligned with business expenses side. I'll talk later on, but let's talk about business expenses. So if you think any expenses is wholly and exclusively for business, please make sure you keep record of those. So how do you keep record? HMRC prefer you to have you to keep the actual invoice or receipts of the payments. Actual invoices or receipts. And receipts, it doesn't necessarily means like you go to a shop and buy it, and then you pay by your card, and they give you receipts. So that's a payment confirmation. That's not what I'm referring. I'm referring to they will give you, say, go to Tesco, and then they'll give you a receipts, and receipts will tell what did you buy and what is for. So say, for example, you bought a pen, and it will say pen, and it will say date, where did you buy, which is Tesco, how much you buy for. So technically you should have those receipts. Now, a lot of small businesses, they're struggling to keep those receipts because you don't spend like huge amount of money, and you're buying here and there. So it's best practice is to take a picture of those receipts, or if you don't want to keep the actual receipts, and then you will have a digital form, and that will help in MTD side, which I'll discuss in a minute. So, or the bare minimum, you need to keep track of those expenses in a piece of paper or Excel. Excel is quite famous for this. So you could have Excel, you say date, what did you buy, and how much you buy it for. And so that's another way. And so that's another way you could do it. And for me, the best way to have a software, if you have a lot of digital software out there like Xero, QuickBook, cash flow. So those software out there, you can use those software to keep record of your income and expenses, and that's the best form. And HMRC is moving towards digitalization, which is part of MTD. So having those software helps. Now, within this sole trader, there is a thing called VAT, which I put it there, value added tax. If your income is more than £85,000 within a 12 months period, is a little bit complicated than just 12 months, but just for simplicity reason, say 12 months. Within the 12 months, if your income is 12,000, 85,000 pounds, then you have to register for VAT. Once you register for VAT, you have that bring with lot of more complication. You have to register for VAT with HMRC, then you have to keep little bit more record. So in this scenario, you have to have actually physical invoice and receipts. Writing down in a piece of paper or an Excel wouldn't work because you don't know how much VAT you paid, all those things. So it's really important to have a system in place, i.e. any of those digital software will help you to keep track of your VAT situation. Again, some of the sole trader business, they hire people work for them, and in this scenario you have to have a PAYE. So so literally you get PAYE registration, which is pay as you earn, PAYE pay as you earn, register with HMRC again, and you need to issue payslip how much you're paying to your employee, and you have to run those with HMRC, and you have to pay relevant tax to HMRC for you on behalf of your employee, and you need to submit RTI, which is real-time information with HMRC. So that's basically in terms of what complication you need to deal with when you're sole trader and if you hit a VAT threshold and PAYE. Now let's talk about self-assessment tax return itself. So when you finish 12 months, so there's two ways you can deal with the situation. So say for example, if you become a sole trader on 1st of April, then there is a two-way you can deal with situation. Number one, you can do from 1st of May till 30th of April, which is 12 months. You could do your tax return 12 months. But most of the people, the way they do it, and that's the most easy way, you follow the UK tax UK tax year. UK tax year runs from 6th to 5th. So 6th of the April till 5th of the April in any year. So when you follow this, then it doesn't matter when you became sole trader. If you become sole trader, say 1st of May, in my previous example, then instead of you doing 12 months tax return, you will do only in this scenario it would be 11 month worth of accounts, and you pay tax for 11 months, and then next year you'll do full 12 months. So that's basically how a lot of sole trader, they manage their accounts. In terms of submission, so sorry, in terms of your declaring your income, so when you're doing the tax return, that brings a little bit more complication as well. What you mean is all of your income, even something taxable income, you need to declare on your tax return. So say for example, in my previous one of my previous slide, I discussed about you might have as a freelancer, you might have a sole trader income, as well as you might have PAYE. So, and PAYE, generally speaking, you already paid tax, and they call it tax as source. Even though you already have paid those, but you need to declare those income in your tax return. And all other income, say for example, if you receive any dividend, interest, those things you need to declare. And even we talk about pension. Say for example, if you're investing money on pensions, those kind of investment, actually it's not a really investment as such, but that's they call it contribution. So, and even though those kind of contribution need to be declared in your tax return. So you need to make sure you are declaring all of your income. And again, self-assessment is your job as a taxpayer to provide all income and expenses within the tax return. If you don't do, then HMRC can penalize you, and there wouldn't be any excuse. So again, you might have an accountant or get a professional advice from an accountant or agent, and they will help you to do this unless you are confident you can do this correctly, which is absolutely fine. You need to submit your tax return once in every year, and your tax year, as I mentioned, tax year runs from 6th to 5th, and your deadline is following year's 31st of January. So if is year end is 21-22, which is 5th of April, sorry, 6th of April 2021 till 5th of April 2022, the tax deadline or tax return deadline is 31st of January 2023. So which basically we passed a couple of months ago. So that's basically deadline in terms of submission. And in terms of paying the liability, first payment liability is by 31st of Jan, and there will be two liability, generally speaking, but that depends based on the individual circumstances. If your tax is more than £1,000, normally HMRC asks you to pay, it's called payment on accounts. You pay 31st of July 1, and you also pay 31st of January another one. So it's two tax. While you are, let's move on to the next one, which is what kind of tax do you normally pay within the tax return? Within the tax return, you pay 3 different types of tax, actually 4 different types of tax. One is not really tax, but say tax. Number 1 is you pay income tax. Number 2, you pay class 2 national insurance, and class 3, you pay class 4 national insurance. And number 4 is called student loan. That's not really tax as such, but you also need to pay student loan. So what is student loan in UK? I mean, if someone is from outside the UK, just for their purposes, in UK, you could get interest-free student loan from the government. And then once you have income, and I think previously I checked, is about your income is £24,000 a year or more, then you start paying student loan based on your income. This is a scaling system. So and system will calculate how much you need to pay tax, and so you also need to pay. So if you are earning, say £24,000 is correct, I can't remember exactly. So if it's less than £24,000, you don't pay any student loan. If it's more than, then if it's £25,000, you pay scaling student loan on this income. So this is how you pay this for, and you have to make sure you're paying all of those correctly. Again, going back to the same thing is self-assessment. So it's your, as a taxpayer, responsibility to make sure that's done correctly. I also talk about pension. Pension is just contribution. If you want to do a self-contribution to a pension provider, you can do, but you need to also disclose those. Providing pension, if you are a higher rate taxpayer, that normally helps you to reduce your tax liability. Again, get professional advice on these matters, and in terms of where to invest money or contribute money for pension, you need to get a financial advisor who will help you to identify the best option for you. But as an accountant, tax perspective, the more pension you, and again, there are some other regulation within the pension, how much you can contribute. I think is a lifetime limit is £1 million, and I think each year you can maximum contribute about £40,000 pension. The reason is the more you contribute, the less tax you pay, because yeah, so that's the reason they put it this limit there. And we also talked about VAT side. VAT is if you are £85,000 and more, you have to register for VAT, and you have to pay VAT on this matter. Next one, I think I'm quite on track in terms of time wise. Let me just, sorry, yeah, sorry, I missed making tax digital. Making tax digital, so it's around 2019 initially HMRC introduced this, 2016 initially they proposed this, and since 2019 they start introducing this phase by phase. So ultimate goal is to have MTD for every single business owner in the UK, from sole trader, rental sole trader, to rental accounts, i.e. people receive rental income, to limited company, all of them. So initially they start with VAT. So once they finish VAT, they meant to introduce a sole trader from this April, which is 2023, but they postponed again due to some complication. Now they postponed it till I think 2025. So yeah, from 2025 now, MTD will kick in. So what is MTD? MTD is making tax digital, which is basically they want to make easier for business to stay on top of their day-to-day accounts. So so basically they're doing digitalization, even though some people they think they're making HMRC is making their life difficult, because now you have to do at the moment, you, as I mentioned previously, you submit only once. Now you will submit 5 times in a year. And so, but they're saying they want to make it easier for businesses. But I could see actually, if you really want to keep track of your business, it might be easier if you start doing bookkeeping on a regular basis. Whereas a lot of sole trader, what they do, they only focus on sales invoice, and they get money, and they are spending money as well, but they don't keep track of everything. And then when tax time comes, they basically start hunting everything and putting together. They spend a lot of time doing this, and then throughout the year they don't know exactly how much time they spend. So that's basically what's happened throughout the time. um yeah, throughout the time, this is what's happened. Now, doing the MTD, the idea is to make the whole thing is more efficient and effective as well. So and easy to be compliant with HMRC, but that brings a lot of complication for the taxpayer. So what I mean is, once the MTD will be kicked in, then you cannot submit anything manually. So a lot of the accountant and individual, they submit tax return through HMRC portal. You can't submit through HMRC portal once this is done. You have to submit through a certified software. So currently, a lot of software out there, they're certified by HMRC, like Zero, I mentioned previously, QuickBook, Cash Flow, so many others are there. And part of this is basically putting every single thing on the software, and then HMRC could see everything quite clearly. Eventually, this is my guess, again, there is no evidence for this. Eventually, what they want to see, they want to really monitor every single receipts and every single invoices from you. So obviously they might create something in the back end to monitor this, but at this stage, this is what they're doing. They want you to put everything on software, and but they don't want you to I mean, you don't really need to put actual the receipts at the moment, but eventually that will be the case, so they can monitor very easily. So that's basically in terms of MTD. So so once MTD will be successful for sole trader and rental accounts, then they will move into limited company as well. And the problem with one of the problem taxpayer are facing, you need to submit 4 times, which is basically become a time-consuming exercise for taxpayer. And again, once you get into get used to with the whole idea, and you do everything as you go along, then maybe it's not a big problem. You can do all of those quite quickly and easily, and you don't really need to worry about spending 3 or 4 days or maybe a couple hours in the end of the year putting everything together, and give your accountant or do by yourself. And you when you do this, a lot of people, they miss so many receipts, because obviously if you think about it, your 12 months is gone, and now after 12 months is you go another 9 months almost to do the tax return. So 12 plus 9 is 21 months. So you might have missed some of the expenses, so you're losing out money. But if you do go along, as you go along, then there is a very less chance you miss any of those expenses, which means you can save tax. I mean, if you look at the positive side, but obviously that means you have to spend a lot of time doing the actual work throughout the years. But if that become a habit, then that will become as a second nature.
A huge thank to Abu. Look out on our screencraftworks.org website for further talks and activities. So thank you very much indeed.